Right. We'll go ahead and get started. I'm going to turn the music down and wanted to start a little earlier because I would like to strategize a better pre-market strategy. I don't like when market opens and there's no roadmap established. Even if we have to update it, I just like to uh, be tracking following along as soon as the bell rings. I want to know if it's going according to plan or if we need to update the roadmap. If it's going according to plan, then that's awesome. If we need to update the roadmap, then that's what we'll do. Um, Before we get started, I just want to give thanks to God for another glorious day. Let's not take not a one for granted. Let's glorify and praise God all day, every day. Um, Before we get started, uh, just want to get us ready for to receive a blessing with our name on it if we are disciplined. So I always go into being a disciplined trader. We can make considerable amount of money doing this. However, there's rules and there's principles that we need to follow in order to do that. And we'll dive into the rules, the principles, a little review. I know I say it every day, but the primary challenge is with greed. Luke 16:10, whoever can be trusted with very little can be trusted with much. Whoever is dishonest with very little will also be dishonest with much. That is the verse that I am writing on my heart to be a good steward and to respect the rules and the principles of being a profitable trader and taking care of what God has blessed me with. With that being said, I'm sharing for informational purposes only. It is my own proprietary system as a result of my own research, and it is a strategy that I use in my own real account. While it's a principle-based strategy, the strategy is subject to change. By sharing my trading activities, it is not a solicitation from me to buy or sell securities for others. Trading involves risk with possible loss of principal. Sharing my live trading sessions should not be construed as investment advice. Okay, so we are, we are not. What we are being blessed with is an opportunity to go through a door. We're looking for high probability setups. I'm going to this is a part of a ministry that we support. So I just want to take a look at Revelations 3:7-8 real quick. As it relates to open doors. The key of David, who opens doors no one can shut. Wow. Revelations 3:7-8 is the beginning of the letter to the church in Philadelphia, describing Jesus as the holy, true holder of the key of David, who opens doors no one can shut. Wow. All right, so we're going through an open door. The open door. Jesus promises to set before them an open door representing opportunities for ministry or access to heaven that no one can shut. Wow, amen. Okay, so with that being said, here's what we're looking for as we go through this door of the stock market. We're looking for A plus setups, which are clear opportunities. We'll be going through the retracement retest. It's a great opportunity to enter an A plus setup trade, and the direction, the bias will be clearly defined, and we will be diving into that. We're not going to force the trades. We're looking for retracements, which is basically a retest of a support level, a retest of the VWAP, a retest of a supply zone, a retest of a demand zone. What does that mean? That means price breaks away, returns to that level, and is either accepted or rejected. However, it's very clear what happens at that level. If price is going up, it gets to a resistance level one time, then it reverses back down, then it comes back up. That is the retest. And that is the opportunity to enter a trade. That's just one example. I'll give other examples as we continue along. We're not going to force the trade. We require VWAP confirmation. We require liquidity and structure. That means that we are at a target level or headed to a target level. And we're looking for the retest of continuation or rejection. Continuation means price continues to go in a bear direction or a bull direction, but it has to hit a level of liquidity, and the market structure has to confirm it. I know that's pretty confusing right there. However, if you look at my screen right now, what you'll see is a retest. So I'm going to go to this big green candle, price breaks away, it returns, boom, it goes back to the VWAP. This wick is touching the VWAP, so it's still on this support level. This is a support level. You see these candles right here. This is a support level. That's what it looks like. It looks like a sideways consolidated position on the chart. That's our market structure, and price is at this level, breaks away, retest not confirmed because it is testing this level right here above. Then price rejects the resistance level and continues down. That's the retest at the high. So key is this is a retest of the high from Friday. And price got to the high, tested it, rejected, boom, went back to the VWAP, and then rejected. And there we go. That's clear confirmation that price was rejected. So what would I do? Once price got rejected, we see the 5-minute candle clear as day underneath the VWAP. That's entry. Okay, that's an entry. Where would I position myself? I would position myself ideally behind the rejected level. So this was the rejected level. You want strike prices to be behind that, higher than 68.45. It doesn't have to be too much higher, because what happens is price returns back to the VWAP line. Well, then you're on alert. Price accepts above the VWAP line and heads towards the strike up here. above 68.45, we're watching for acceptance or rejection of 68.45. If price is accepted above 68.45, you enter the position and you exit. I'm sorry, you exit the position. You cut the trade. You end the trade. You take a small loss, maybe you might break even, but that's greater than that. That's not as bad as price breaking up and continuing on. I hope that makes sense. If not, then let me know. Um, so another thing about this open door is if we don't get confirmation, we don't trade. So we need confirmation. So that's how we're going to execute today with much respect to the open door. Okay, so replacement system upgrade, replacement system, retracement. I'm sorry, retracement. Well, I just illustrated what a retracement looks like. What we are going to do is we are going to go into today's game plan and strategy, and we'll revisit retracement. I'll call it out as it happens. Okay. So what we want to do is kind of outline Monday. Let's take a look at Monday. Monday is usually range discovery, fake moves, and liquidity testing. So a lot of fake and jaking going on today. So we definitely want to be disciplined and wait for the retest retracements. There we can expect during quarter one liquidity sweeps, fake outs, overnight trap testing. So that's typically quarter one every day, but especially on Monday. So we need to set those limits, those limit orders, those exits at 25% for sure. I would not suggest today to be the day to not Monday, right? We want, oh, what just happened here? Get rid of this. Oh man, what's going on? Sorry, guys. This is ridiculous. What the heck? Uh, okay, so got rid of that. Let's see. Full screen not showing. Don't know why. Full screen. Geez, Louise. Don't know. I'll try to manipulate the screen a little bit. Full screen. I don't know what that looks like. It's hard to tell. Like this is what I see, and I'm like, I don't know. I don't know what's that. I don't know if that makes it better or worse. And I don't know about this either. Huh. Click right. Click right. on the source. Source, click right, select transform, and choose fit screen. Source, oh, that's not source, that's scene. Oh, screen capture, click right. Whoa. Oh, transform, fit screen. Okay, that wasn't too hard. I hope that worked. That worked. So what we need to do though, here's what we need to do. We kind of talked about quarter one, observation only. Quarter two is where we'll see, or we should see two trades, 25% exit. And thanks for letting me know. Hey, we got that solved. All right, today's going to be a great day. Thanks, Becky. Quarter two, two, we should see 2-day trades, 25% exit. And here's the strategy. We were experimenting with the gamma pin 12 to 1. A better entry time is actually quarter three for the closing trade, the gamma pin. Best time for that, I've narrowed it down to 10:30 to 11:30, and we can expect decent credit, $1 to $2. Um, and we're looking for a delta of 10 to 20 at that point, with a distance of 10 to 20 points as well outside the risk center, which will define. It needs to be redefined towards the close. It shouldn't necessarily be the same as the open, or the gamma pin. Yeah, we'll talk more about the gamma pin and the shift and so forth of the gamma pin towards the close. But it is subject to pin near the highest level of contracts, and attempt to return to the VWAP or the previous pin zone. However, as we saw on Friday, it rejected a resistance level and was unable to continue its journey towards the gamma pin zone and the true risk zone and the VWAP. So it all got rejected because it could not. It wasn't, price was not accepted at a resistance level. So that is the game plan. Quarter two, 2-day trades, 25% exits on each. We'll catch the retracement, should get a decent premium. Premium is better when the trade is entered at the retracement level. I sent a report out in regards to credit, delta, and distance, and we'll be taking a look at that as we get ready to execute the trades. So that's just an overview of what we'll be doing today. Risk management, I guess I'll touch on that real quick. We need to make sure we exit the trade as soon as the thesis becomes invalid. We'll give ourselves, we'll make sure we have a safe position distance-wise, 10 to 15 points behind a resistance or support level. Maybe 2 levels, depends on the market structure. And that's what we are looking at in terms of play execution. What we're going to use this time for, though, is we're going to go ahead and go to let's go. I'm not going to do it on this screen because I don't want to jack things up. However, what we need to do is open up our platforms, and we need to go to the options screen. So we're going to bring up SPX, and we go options and bring that up, and we want to take a look at open interest. The current price is 68.16. We want to go to, yeah, let's go to the put side first. Going 100 points below, and I'll go 100 points above. Taking screenshots, 100 points below, 100 points above. Just to get a 35,000 foot view of where price could go in terms of liquidity, contracts. Seeing where the highest number of contracts are located. This just gives us probabilities. So that 6,800 is still psychological round number magnet. Oh, interesting. 6740 has a high number of contracts. Okay, so we got that. And I'm going to bring up the ES futures. Bring up ES futures. We haven't done this exercise in quite a long time. Okay, so this is the 5-minute ES futures. And I'm going to squeeze in. This is the 12th. Oh, that was overnight. Okay, so, whoa, look at that. That was a big gap down on the futures. Okay, I think that shows us quite a bit of data. All right, so we'll take a screenshot of the ES futures. It's the 5-minute. It shows a considerable amount of market structure. So that's plenty of data for my AI Grace to interpret. So I have that. Now I'm going to flip it back to the SPX. The lines are Friday's highs and Friday's lows. Previous day high, previous day low. I marked that off last night. I was just looking at it real quick. That's the blue line and the red line. Okay, so I have a screenshot of open interest. I've got a screenshot of the ES futures, and I have a screenshot of SPX, all on the 5 minute. And I'm going to go ahead and put that into my AI and let Grace do an analysis and get the first smart money roadmap generated. May need to be regenerated after market opens, but I just like to have a game plan and an idea of what it could look like at the open. Okay, so let's take a minute and get those submitted and be quiet for a second for a few minutes. I'll hold off on reviewing the smart money roadmap, just for the sake of not throwing too much information out there at one time. Um, Grace is asking for another screenshot. So I'm going to pinch in, see if I can get. That's a lot of data for Grace. There you go, Grace. There, I like that. So let's see. Just thinking ahead, I'm gonna go get a cup of coffee before the market opens. But thinking ahead, first trade of the day, I like to do a directional trade, get 25% of that off of that. Second trade, I'm looking at a BWIC or an iron condor. Becky asked me this weekend about the iron condor. It is still my favorite play. I just have limited use of them with the platforms I'm on. They're harder to manage on some different platforms. So I'm like, okay, I'm going to simplify trade management. So I don't like complicated trade management. You know what I mean? Um, so I save my condors for the best opportune moment, which is more like when volatility is slowed down and price is steady, more steady price action. Okay, so let's take a moment right here, grab coffee, be right back. Got 5 minutes till market open.
First quarter liquidity sweep lockout. Market open. No trades during volatility. Observe only. Q1 smart money psychology lets trick retail into buying so we can offload. Sweep confirmation. Volume confirms sweep, breakouts, exhaustion. Sweep volume spikes 150 to 220% of the prior 20-bar average. Occurs at or through the previous day's high or previous day's low. Overnight high or overnight low. Sweep completion continued. Occurs at prior liquidity cluster. Single impulse candle. No chop. Immediate range rejection or stall after the spike. Breaks key level by 3 to 8 points. A fake sweep, 130% volume, overlapping candles. Price holds above or below with no rejection.
Okay, here we go. Let's be exceptional in our trading today. Let's be awesome. Okay, so we're at the previous day's low. We're at Friday's low. All right, so that is on the roadmap. And let's start with the analysis of the roadmap. Mind you, the bias is not confirmed. We're simply doesn't mean we're going to have a bearish day is what I'm getting at. We're just doing liquidity sweep at the prior day's low. 6,800 is obviously a major level. If it breaks below 67.98, then that would be a breakdown, right? And we're looking at price going lower. Yeah, so I will go ahead. Right, we can compare notes. So here is a test of the 67.98 level. All right. I posted that smart money roadmap. I don't think we can do better. So I'm actually going to take another screenshot for myself. I'm going to update my smart money roadmap. There's just not enough information on there for the downside. So the main thing is not to get trapped. All right. What happens on Mondays. So we'll be patient. And it looks like 6798. Well, we're testing. I'm generating. So I am going to throw that first smart money roadmap out. So I threw it out. So generating a new one. Okay, let's get down to business now that we've got a more accurate smart money roadmap. Okay, so we're looking at a neutral to bearish shift. So market is slightly bearish. True risk center is 695. 6805. That is the true risk center. That is the center of the range. 6795, 6805. So the key shift is price was lost at 6,800. Now it's a resistance level. So 6,800 is now a resistance level. So we'll call that red line. Yeah, I like the vicinity of it. 6810. Okay, so we'll mark off 6810. Gonna make it blue. And 6825. Okay. Support levels 6780. Six, 775. We'll leave that there. Pretty close. 6755.
First trade window open.
6740. There, we got support levels. We got our resistance levels. Looking at a possible put credit spread. Down at 6775, 6755. Well, it really depends. Price comes down here, but we want to retest is what we want, and we'll take it from there. I'm not going to get too far ahead. If price, well, price is on the way to 6,780. That's the next test zone. Zone test we'll see is 6,780. So we might see a bounce at 6,780. Price will retest the 6,798 level. So we're looking for a retest is what we're doing. I've liked the 2 minute. I'm going to head take a look at it. Looks like we're getting maybe the first retest of the morning. Okay, this is going to tell us something. It's going to stretch to 6809. See if price accepts 6809. See it closing the gap. Yeah, we did see the John Wick right there on the 5 minute. It's a strong bull move. That looks like a rejection at 6,900. Price attempted to go higher. 6809, sorry, 6809. Let's see where the resistance level is above 6825. $68.25. So I went ahead and entered the first trade of the day. I took a call credit spread, 68.25, 68.30. Got 165 for it. I'm going to go ahead and set my limit price. Let's see. So we are at a level, where are we here? Support level at, we'll call it 15. Okay, so I have my limit order in place. Let's see, I bought the contracts at $1.65. I'm selling them at $1.20. No, I sold them at $1.65 and I'm buying them back at $1.20. Okay, so that's gonna be our profit. Um, got into that trade little early. Could have waited till here, but I saw the signal here. I gave it respect, 68.25 to 68.30. Um, so I was good, didn't panic. However, this will be a new resistance level, so I'm going to go ahead and mark that off. Yeah, so this is how I end up with all the lines at the end of the day is I'm just marking off where price uh, targets or where price has been and left in this case, it left a resistance level. Right. Well, I could actually pull that line down. So I'll just pull this one down. It wicked up right there, so I'll leave it right there. Ah, gee, did this earlier. I don't like that. Go away. There. Okay, so we're coming back into my safety pocket. Price is retesting 68.15. Well, a derivative of SPX isn't bad. I'm using a derivative also. This is XPXX. This is how I get the VWAP on it. But it is tick for tick with SPX. Hopefully that helps. Well, we're seeing a pretty big fall right here. Okay, so I was just doing a little trade management. We are seeing a reversal, which is great. I entered a call credit spread. Strike price is 68.25, 68.30. Um, I did enter the trade prematurely, but it's working out in my favor. I could have been a bit more patient and not reacted to the first John Wick reversal candle that I saw because price continued up and hit the level, um, hit the previous day's, well, hit a resistance level, we'll just say that. It went up to a resistance level, wick down, and then we see it going down from there. So I could have entered as price was actually at 68.23, got a better premium and a better position. I could be even higher than 68.25, which would have been awesome. However, we're doing okay. I've got my limit order price set. Uh, it is set. Um, there's always a temptation to change the limit order price. However, I'm going to leave it in play until I see, something other than what we're seeing right now. So we're seeing price at a support level. It's doing a retrace. So this is a retracement, like I was saying. I saw, wow, a big, I'm on the 2 minute chart. I see a big red rejection candle. Um, it's not fully formed yet, but it's, well, not. I don't like, I don't like predicting. I like to just let, base my analysis on what I see, not what I think could happen.
Q2 continuation or reversal decision trap. Midday chop zone. Range behavior likely. Capital protection phase. Smart money psychology lets them think prices stably accumulate quietly.
I'm going to take a look at barchart.com just to get a more in-depth, well, hopefully we'll see what bar chart says about support and resistance levels. We're getting another retest. At 68.23, I have the line drawn. I'm showing TradeStation chart. Becky's on a TradingView chart. Uh-oh. Not sure what that means. I mean, I know what not showing real time data means. That's happened to me before. Um, I switch time frames, and that usually snaps it back into place. Or I go from my watch list chart to my trading chart, and that might snap it back into place. Okay, so we see a second rejection at 6823. That's what a true retracement retest looks like. So price has officially been rejected at 6823 level, which is good for my position. Right now, the bias is bullish. However, we've seen rejection twice at 6823, and price is moving, has been rejected at the retracement level. And so we're headed back to the support level of 6815. So we do have confirmation now that 6823 has been rejected twice. Now we're not guessing. We know, we know, we know, we know, we know. Thank you, Lord, for the revelation and the reveal. So price is pulling back into the support level. And that is textbook retracement. Yeah, so 1% better every day. I would have had a much better play if I had waited. If I had waited for the retracement, the retest. Just think about it. So when we get to a key level, most often we'll always see a retest. Most often. This makes sense of my 5 minute chart. Okay. Uh, so that's a key level, 68.23. Price has attempted to break that level 3 times now. Well, in this case, third time was not a charm. Let's clean this up a little bit. That looks like a duplicate. There we go. Looking at this break of structure over here, I don't like that very much. Yeah, break of structure at 68.43 concerns me. So if I see any funny business here, I'll execute a close pretty fast. This is already funny business. However, I haven't been breached. Let's see what's going on the 2 minute. Yeah, we're seeing if price gets accepted at this level right here. It hasn't so far, but things do change, and we're just looking at the market structure. We're not predicting. We're just going on price action and acceptance and rejection levels. So this is a big deal. So on the 2 minute, big green candle, and let's check the 5 minute. See what happens right here. This is the determining factor. This line right here. Go to the 2-minute. Two-minute showing a John Wick. Okay. And relative strength is confirming. So we're at a key level. We're seeing a John Wick. We're seeing relative strength angle down. And we're seeing red volume. So this does confirm a reversal. Let's take a look at the 5. So we're back inside of the zone. Broke the zone, and next candle went back inside the zone. So we've got the John Wick at a key level, followed by a bearish engulfing candle. We got RSI went down. It peaked up at 62. Now we're down at 53. So those are all indications of a reversal. So get a close. And we'll raise this up a little bit. And we'll put a blue line right there. Well, what can we say? We can say that we have today's high at about, I'm going to say about, it's not exact on every chart. However, especially the way I marked it and so forth, but we can say that 68.30 is today's high so far. We are currently at a resistance level that I've marked off at 68.24. Price is at 68.22. It's been rejected above. I have the next support level at 68.15, which could be a bounce area. Well, price is still fiddling and diddling at the resistance level of 68.24. We got some fiddle diddle there. So as of this moment, the high 68.30, that would be a great place to do a call credit spread. I had marked off 68.43. So beyond that, premium should still be pretty decent. As a matter of fact, let's take a look at that. So we're seeing a retest at 68.25. Well, I actually have the line drawn at 68.24. I'm going to enter another call credit spread at the close of this 2-minute candle if it's beneath um, the resistance level at 68.24. Just waiting for it to close. The idea was to do the 2-day trades before 10:30, and this looks like my entry. See if we get a pullback. Okay, so looks like 68.24 has been rejected, and we'll head to 68.15. And I entered my second call credit spread. I took the position of, let's see what I've done. What have I done? What have I done? Took the position of 68.30, 68.25 call credit spread. So I've got the two call credit spreads working right now. Got a retest of 68.24. Got the wick down on the green candle at 68.24. Means sellers are pushing the price down. So the key here is to get price. Well, to get what I want to see is for price to continue to close below 68.24. The idea being that 68.15 is the magnet. At this point, I'm pretty convinced that 68.15 is the magnet. As we've seen price rejected from, let me see, about an hour at the higher levels. Okay, first time in a while, we're seeing 68.19. All right. All right. So, I'm seeing 68.18. So RSI is at 45 now. So that's a strong indicator that price is going to fade down, and average true range is down. Volume is red. So we are going to the sell side of the structure. So as price gets to 68.15, that's a big moment. That's a big moment. We'll see if we consolidate, bounce, or what happens at 68.15. That's where I decide to close or to let it go to the VWAP or 6806. We've got the U.S. Navy blockade starting. We'll see what impact that has on the market. I don't think it'll have a positive impact. Well, let me rephrase that. Depends on the play. I'm in a call credit spread, so the play is for price to go down, and that is what it's a prediction, which we don't do, but I don't believe that's going to cause price to go up. Looking at the 2 minute, seeing a pin bar here. After a surge like that, a pin bar means price is gonna reverse. It spiked up to 68. $25. Big impulse. However, it's a sign of it's a reversal sign. Here we saw we're seeing a retest of 68.24, 68.25, 68.24. So we can call that a retrace. It tested a previous resistance level, and it's showing signs of a reversal. So at 68.15, we did see the bounce. So that support level did hold. And we'll see if this resistance level holds. Looks like it's holding. Looks like the resistance level at 68.24 is going to hold. RSI is diverging again, 46. Average true range, it's going down, seeing red volume. Right, we're headed back to our support level at 68.15. I marked off, but it actually 68.18 was the point in which it bounced. So I'll move it up a little bit. And so we are now back at the support level 68.18, and we'll see what happens. Got the VWAP down at 68.12, so that's a magnet. And we have lower liquidity. And we've got price reacting to this level. Something to drink here. Yeah, we're seeing selling. Well, we were. Well, there's always buying and selling, right? However, we're at a key support level. This is the level I would like to see. Well, the market doesn't care what I would like, but my thesis would be supported uh, once this level is broken. My thesis would become very, 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 very valid, and I would give it A plus once this level is breached. So that's what I'm waiting for. So I've executed my two morning trades, and the next trade to come up is the hold until expiration trade, which I've identified as 10:30 to 11:30 being ideal entry times for that one, to capture decent credit before the delta collapses. We can still get adequate distance for safety as well. Okay, so we are now selling off into the support level at like to see a candle close beneath there. The market doesn't care what I want to see, but again, that would support the thesis. Okay, we're starting to see the formation of the first candle beneath the support level at 68.17. Still touching it, not clear enough for me. However, I'll take it. It's not going towards my strikes, so I'm happy. So we got price headed towards the VWAP. We're seeing a key support level being tested right here. Seeing some sideways consolidation with the VWAP pretty close, 68.13. Price is above the VWAP. However, we're in a downtrend. We've got lower highs and lower lows forming. We've seen a series of retracements and rejection each time. Again, a retracement is where every time it touched this blue line where my crosshair was a retracement. So boom, touch, reject, touch, accept it for a minute, hit the next resistance level, bounce down, reject, it rejected it. Another retracement, boom, it tried to take it, reject, touch, reject, wake up, reject. So the retracements indicate rejection at the higher price levels. And so now we are seeing lower highs and lower lows, and we're actually getting a test at a key support level right here at 68.18. And that's not guesswork, that's just the way it is. So I executed call credit spreads at 625, 630, and then I executed another one 68.30 to 68.35. So I've got two positions right now, and we're letting theta do its work, as well as price is going away from me and not towards me. I would really enjoy it once price rejects the 68, 17, 18 range. Got VWAP below there, so that's a magnet. And price should, I hate saying should, but we'll just leave it at 68.13 being a magnet, seeing that that's where VWAP is. We are looking at the sell side of the market structure. We've got today's high at 68.30, which is where I entered at the top of the box. We should see some action. Well, I don't like saying should. It's not a good word to use as a trader. We operate on a thesis basis, so it's either valid or invalid. At the moment, my thesis is valid, and Okay, so this looks like the first candle closing beneath the key support level. VWAP is right below. What happens after VWAP? Let's see if we get a bias flip. Well, We saw big spike up. We see a big spike up. Spiked up back to 68.26. Looks like a liquidity sweep, a big one. And then price quickly reverses back down. No John Wick. That's a pretty obvious one. I believe we saw a bunch of stop losses being snatched. Tricky. Yeah, that's the way it goes before price reverses. Trigger put a lot of fear in us, and then trigger stop losses cause people to panic, and then price reverses. Well, what that did was that put us above the support level again. Oh. um, yeah, we'll give the TTM squeeze a little bit more room. Whoa. Yeah, that's good. Okay. RSI is bending down again. We're getting red volume candles. Um, Indicator that we're seeing rejection again at 68.24. We see that wick up like that. That is definitely a liquidity sweep. It's called a stop hunt. So we can look at it as liquidity is not being hunted up at the top of the range anymore. It makes me want to get an update on the smart money roadmap. This is my This is actually my third, if we're counting how many times I've updated the Smart Money Roadmap today. I did it at the opening because there wasn't enough upside information on it. So what most likely happens here is we're seeing liquidity sweeps. And we'll most likely see a return to 68.17. There's a high probability of that. And we're looking at the possible pin range. Getting another update with price being where it is. This is critical right here. So we're looking at pullback targets of 68.24, 68.20. So we're seeing a test of 68.30 right now. And if this is claimed, then that's bad news. RSI is pretty high right now, so we're going to base this on candle closes. See if we get a pullback inside the range or if it breaks the range.
Q3 exhaustion zone. Late session window. Manage positions carefully. No revenge trades. Smart money psychology now that you want to move quickly before retail reacts.
Okay, so range has been broken. Got a new high. We got John Wick at the top. It's a key level to see a pin bar. Not seeing follow through under reversal. Here's follow through. But we need a red candle. It's red there. Even though it's a doji and skinny red, it means sellers are now in control. So price is being tested at 68. What do we call it? Before it wicked, it was 68.39. This is all engineered movements. We've got relative strength angling down now, but it's so high it could, change at any minute. We are getting reversal signals that price will not accept here. So recap. um, we saw an attempt of price to push higher, and it got rejected at looks like 68.45, and now it's breaking. Well, we've got like a reversal indication right here that price will not be accepted at the moment, we'll say, at 68.45, and it's breaking back below the resistance level before we saw the surge. That was definitely engineered by the institutions to see if price would be accepted higher. And we are at a key support level, right? Well, yeah, we'll call it support at this point, right? But it was a previous resistance level, and now it's being tested. However, we have a clear indication here that there will be a reversal, and looks like the actual range will be 68 30 to 68 25. Yeah, high probability that we'll see a retracement right here. A retracement to 6830, and high probability that we'll see 6825. Let's see what happens at the retracement here. Key level test. What we're wanting to see is if price is accepted at 68.40. Let's take a look at the 5 minute. 2 minutes getting a little noisy. Okay, so 5 minute has a different picture. This is about where it wants to go. That's that structure on the left I was concerned about. Oops. So what we see here is a liquidity sweep at the previous day's. I think this is the previous day's high. So we're sweeping liquidity there. We're at the tip top of the range now. Seeing a lot of wicks. Looking at the 5-minute chart now. It's not as noisy. So this is a key level. Another key level. We've had quite a few of them today. However, we are at the high and a reversal here would be a good entry. So we've got the wick up right there. What does the 2-minute look like? Yeah, then we've got the red candle. So we've got the wick, next red candle. This is red on the 5-minute, and we've got a reversal pattern. It's forming, and this would be a great entry for a call credit spread or a BWIC call credit spread on top of the wick, and it can be as low as we got quite a few resistance levels from here. 1, 2, 3. Go get a pretty good BWIC from right here. Oh, need confirmation. However, on the 2-minute, let's see if it's confirmed. 2-minute does confirm reverse. Well, 2-minute says reversal, but we're gonna go with confirmation off of the 5-minute. do see the red candle forming. Oh, it's not red. See what's happening on the 2. I'm waiting for the reversal so I can enter a call credit spread here. Well, I guess that's what we're all doing. Imagine there's a bunch of traders waiting for a reversal at this level. Well, we want well confirmation of a reversal at a level like this would require the RSI to go down. Right now, it's high, on the verge of being oversold. Excuse me, overbought. Yeah, I'm getting my verbiage together. Been correcting myself all day. Might be time for coffee. Give it a couple more minutes here. Gonna take a coffee break. Well, looks like let's go to the 5 minute, get an update. Well, I can't quite say price has been accepted at this level. However, what happened the last time we were here? Last time we were here, we saw a big sell-off. We always see it. We've been seeing big sell-offs here for quite a while. RSI is elevated. It's been quite a trend. RSI is still pretty high, so cannot confirm this as a reversal. RSI is bending down. We do see the formation of a red candle. Time for a little Bloomberg. Five minutes showing a sell into the support level. I'm going to go ahead and turn that red. All right, 2 minute is showing sell into the support level, which was the resistance level. Everything was the resistance level at this point. So before I take a coffee break, I want to see what happens at our support level. Just waiting for a signal to enter at the top of this range. Right, we got a wick up right there. Let's see what happens on this 2-minute chart with this red candle. Want a good position on this one with good premium. So good position would be like 68.55, 68.60. Good premium. If the range is stretched, we got a stretched structure. What I mean by that is price started at, well, here. There we go. So it started here at this green candle, and we'll just say it started at 67.80. We could say it started at 68.07, and now we're at 68.48. There's not much to the upside. Okay, so on the 2 minute, we got two red candles. So I'll flip it over to the 5 minute and see what it looks like. So we're getting a red candle. And our RSI, oh, it's still pretty high. For a true reversal, we need to see RSI like coming down, which is it or is it not? It is not. It's staying at 70, which is overbought. So it makes sense, right? If it's overbought, okay. So it just went to, well, it's coming down, but yeah, now we're in the 60s. Yeah, it's coming down. So let's see what happens at this resistance level. It's too late in the game to be trapped in a play. Yeah, I need some coffee, but I'm waiting to see what happens. Okay, so we are seeing a decrease in the RSI. I'm almost ready to execute. Let me take a look at the 2 minute. 2 minutes showing little tower of power. But I want to see the support level get hit. Let's see, I'm updating the roadmap again because we are definitely at the top of the range, that's for sure. And it's almost time to enter the expiration play. Boy, we got a lot of different scenarios today. Hmm. So we're looking for a rejection at the high. That would be ideal. A wick above 68.50, close back below 68.45. Then a call credit spread. That's what I was feeling. So here we are with the test of 68.50. Buy Condor. Safe, not greedy. Put side 68.20. call size 6860. That's what I was thinking. Ideal position would be a call at 6860. Yeah, call credit spread after rejection. So price needs to be rejected right here. And then the play is a call credit spread. So that's the play, and just holding on. This isn't gamma pin. This isn't a pin situation. So okay, so we have RSI finally coming down. Make sure, okay, 2 minute has us approaching the support level. Excuse me. I really need some coffee, but I don't want to leave just yet. I've been saying that for like quite a while. Don't want to wait too long right here. I am pretty convinced we're at the top. Well, we go against the trend once it's over. Then we're going with the trend. We'll be going with smart money. We'll be going with the market, not against the market if the timing is precise. So what we are looking for is a reversal signal at this support level right here. We are at the top of the range, and although the bias is still above the VWAP, what we are doing is we are selling at a premium. So we are going to mimic what they're doing. So they sell at a premium and buy at a discount. So this is so they've bought, and what we are waiting for is the signal that it's time to sell. Okay, so price is coming down. Just wanted to get past this level. Okay. Okay, so we executed call credit spread at 68.50. I executed that because the support level has been tagged and hit below on the 2-minute. So I use that as my entry for execution for entry. and RSI is now 48. So that's what I went with before premium collapsed. And now we go into trade management mode. And we should have, well, let's see where we're gonna meet some. We may, let's see, yeah, here, no, too close. Well, I'll go ahead and take another screenshot of the smart money roadmap. Well, of the market structure for the smart money roadmap. Okay. So we're no longer in expansion. True risk center pin is 640 to 645. So we're transitioning to neutral. ATR dropping, momentum fading. So we're getting lower highs, 2 minutes showing like sell. We're going from trend continuation to distribution. 650 was rejected. We got a demand at 68.32, 68.32, and breakdown is 68.20. $68.40 to $68.45 is the magnet zones. So this is what I wanted to know. We've got support levels. late stage support levels, 68.40, 68.30, and 68.20. Okay, this looks like a little break. Looking at possibly opening another position, trying to see if the premiums are better now on the call credit spreads. Yeah, still on the call credit spread. Could price push above 650? Yes, it could. I mean, it always can. However, um, this is the extension. Based on my thesis, we are at the pretty much exhaustion point, and pretty much at the exhaustion point based on my thesis. However, we always, when possible, want to we want to be at a safe distance. I'm in close, so I base my thesis on the fact that we are overextended, which is why I entered the play. And I based it on, look at all this. Buying. We accumulated quite a lot today. And so I'm looking at, we need to do some distributing. We need to see some distribution. That's what I base my thesis on.
Just really got about 20, 25 seconds left. Goldman, tell us anything about what we're going to get tomorrow from JP Morgan and the others? The $5 million bond sale? High bar for everybody else, yeah. You covered it all. Thank you, thank you. Bloomberg News banking reporter Todd Gillespie here in studio. Coming up, we're going to get a multi-asset view on the markets. That's next. Get the Bloomberg Business Week newsletter, BW Daily, delivered to your inbox every weekday. Get the power of Business Week in a handy form. Sign up at Bloomberg.com/newsletters. Hi, I'm Christy Murphy, inviting you to join us for Bloomberg this weekend. Show Saturday and Sunday starting at 7 a.m. Eastern. It's Bloomberg's #1 on that weekend to-do list. Watch the list.
Starting healthcare career, but not sure where to begin. Hey, what up? It's this Nate from Honor and Ryan Seacrest on Kiss FM. You know, American Career College offers multiple healthcare training programs that can be completed in 10 months or less, including medical assistant, dental assisting, pharmacy technician, and optical technician. Get hands-on training and real-world skills that prepare you for today's healthcare setting. Financial aid and scholarships are available to those who qualify. Don't wait. Visit ACCfuture.com. That's ACCfuture.com. ACC cannot guarantee employment. Call something classic, you've got to mean it. And that's why when we say TuneIn's exclusive classic hip-hop station is the real deal, we mean it. From golden age gems from OGs like Tupac and Biggie to chart-topping bangers from the biggest artists of all time, like Jay-Z and DMX. There's a little something for every hip-hop fan on this station. Ready to find your flow? Just search Classic Hip-Hop or tell your device to play Classic Hip-Hop on TuneIn to listen. The music you love is all right here on the TuneIn, bringing you the highest listings. But are you ready to amp things up even more? Just upgrade to TuneIn Radio for all of our exclusive music channels. Completely commercial-free, so you get more of today's hits. More country roads. And everything else. Hear it all here, commercial-free on TuneIn.
Nothing sets the tone for your day. That's why Country Roads is here just to be. Express your device like Country Roads on TuneIn. Southern hospitality.
Reliable water doesn't happen by accident. It depends on a vast infrastructure of pipes, water treatment facilities, reservoirs, and most importantly, a dedicated team. Your local water providers are made up of a diverse group of people with a wide variety of backgrounds and training, all share a common goal. Ensure ensuring high-quality water is available when you need it. Learn more at placerwaterfuture.com/radio. 1 second you're enjoying your first day off in forever. Then mid-lunch, your phone buzzes. A window's been broken at home and you're miles away. In 1 second, everything can change. That's why ADT offers security systems with 24/7 monitoring with tech that helps first responders prioritize emergencies. And with the ADT Plus app, you can stay informed and protect your home virtually wherever you are. When every second counts, count on ADT. Visit ADT.com to learn more.
Podcast. On Wall Street, markets all on Bloomberg stocks will push higher. S&P 500 index just about the next level of the day. Dow Jones Industrial Average, 1,000 even, up 84 right now, about 2.1%. S&P up 0.5, NASDAQ at 155, the NASDAQ right now, plus 7.1%. 20, 10-year, 4.29%, 3.77%. Gold is down $21 the ounce, so $57.28. Gold dropped now to 0.4%. Crude is for today. That's up 2% from below $90 a barrel now. 90. We're talking about West Texas. Crude barrel of Brent global benchmark 99.60. Now up about 4%, up by 4% on crude. So again, down the S&P all higher, keeping an eye on shares of both Dell and HP. They jumped after a report from the website SimAccurate. Landscape, Dell shares were up 5%. By 3%. Nvidia was down 3%. On-demand news, while it's a bit like Bloomberg News now wherever on Amazon, Charlie Cummins.
It is indeed. All right, Charlie, thank you so much. Carol Masterlow down in Mitchell, 10 things off today. Last block, we caught up on geopolitics about their unlocked champion about the Las Vegas blockade administrative fund news. We also got today's earnings from Goldman Sachs. It's up for their big week for the big banks when it comes to the quarterly updates. On that, though, Goldman Sachs CEO David Solomon weighing in on markets on this morning's earnings call with analysts and investors.
2026 began with a great collapse. Markets at record highs, confidence continued to build, with most clients focused on growth, strategic activity, and capital efficiency. As we said, when you only move in a straight line, the further progress, the macro environment started to weigh on sentiment. Powerful meaningfully, concerns about AI-driven disruption, sector-wide software, and uncertainty posted by the credit, the conflict, and the belief.
Taking uncertainty from short. That's Goldman Sachs CEO David Solomon this morning earnings call with analysts and investors. Today on markets, here in studio, Mike Metropolis, who's head of multi-asset macro investing at Dennis Henderson Investors. The firm has about $20 billion in assets under management. Welcome. How are you?
Sorry.
Doing okay. I'm watching. It seems like some calm in the market today. We've seen oil prices, they're up, but they've backed off. We've got stocks a little bit higher with them. You mentioned Mike volume earlier today. And then, what draws your attention on a day like today?
I don't think it's any one thing. I think what we're seeing is a market that's a little bit confused, very directionless. Can't really figure out which way it wants to go. And that makes a lot of sense when there's a lot of uncertainty out there. And so I think investors are uncertain, sitting on their hands a little bit, find what the next political move is going to be, what's going to happen to prices, more importantly, inflation and earnings, right? That's the start of earnings season here. And, what ultimately will all this, uncertainty mean for action and risk. I think there's a lot to consider if you're an investor.
It's a long list.
It's a long list. I think, Dave Solomon kind of, was maybe a light touch on how much uncertainty is out there and how much is changing.
That's a great point. And I think we're going to feel what CEOs say. But do you feel like investors in general have been downplaying the level of uncertainty that we've had for a long time?
Yeah, it seems as though certainly the U.S. market has definitely been. I think there's meaningful that the board had on prices, on potential margins as we go further into the year. On the flip side, this whole thing resolves, markets could be meaningfully higher. When we went into the conflict Well, the thing that I find interesting is if you look since the end of February when the first attack happened, we're down about a half percent in the S&P 500. The Russell 2000 is up 10%. It's speaking about kind of the divide that we see in the stock market. What areas
So this is looking like our gamma pin zone. It's pretty close to my, where am I? Yeah, I may not hold my trade to expiration. Might actually be closing it out. 68.30 does come into play. Let me revisit that.
international markets. We have emerging markets actually, and Japan, Europe, energy, materials. Those are necessarily bearish positions, right? If I was really bearish, we don't have more cash. We can see healthcare, we need utilities. Those sectors are not our overweight in our portfolio. So what we've done is we've retained the contours of our portfolio through water. We've increased cash with too long or comfortable with some of the actual positioning because obviously the knock-on effect for regions like Asia you're going to learn a lot over, 6 to 8 weeks at the long, it could be sooner than that, 4 to 6 weeks even. As we start seeing more and more data come in, economic data, earnings data. Yeah, I think that's probably right. I mean, you're going to have a very good, I think you're going to have a very good handle on the impact of what's going on in Iran, how the higher oil prices are going to affect sort of the downstream earnings landscape, probably by, mid-May or so. Well, one thing that we've obviously been tracking is the expectation around the Fed. And if you go back pre-war, we were penciling in, 2 to 3 cuts for the year. Now, maybe one at the middle of next year. How quickly can you reposition for that expectation? Just to your point, we're not really going to see the knock-on effects in economic data, at least for a little bit longer. Well, this is what I think is we felt like inflationary impulse from strong economic growth, demographic changes, globalization, a whole host of things not going to allow the Fed to really cut significantly this year. So when the market is saying 2 or 3, you're saying 0 or 1. If the market kind of comes down to no, we say there's a possibility of a hike. And so ultimately, I think investors need to consider that we're not in an environment that the Fed is in any sort of position to cut interest rates. And so we've been fortunate in that we've sort of been a little bit, we came to neutral duration as rates fell and went into the threes we remain underweight duration. I feel very, very comfortable with that. We don't think there's going to be much position changes on the external side in our portfolios, unless you get a big credit spread widening event, in which case we'll avoid credit. And right now, it's
Hey, Mike, in the notes that you guys shared with us, focus on the Fed saying that drilling into credit things will be a mistake and we expect Treasury yields to go much higher. That will further hurt growth momentum and motivation assets. Now you're floating rate debt. You believe like that?
yeah, I think there's a ultimately prevail, and if don't cut into an inflationary environment that's probably heading towards 4%.
Yeah, it's hard to see if we don't have some kind of inflationary environment, at least pressures, whether it's higher energy prices, even if it's a little high, we've seen with this war. But I also think that the global buyout and that's security is having so much more back in the it's going to be price pressures. You have private credit. Before the war, we talked about credit and what are your concerns about private credit? What's the reality in your view?
So our concern is that there have been some managers out there, and I think they've been like that really sold the vehicle as being somewhat liquid. I think that's really where the danger lies today. I think it's also being managed amongst all of private credit into one bucket. There are many different forms of private credit, and within say private credit backed by corporate loans, there's different types of managers. And so I think lumping all of private credit into one bucket is a very dangerous thing. Some of the funds and some of the bigger players that we've seen that have run into redemption troubles, I think create obvious fears around liquidity and ultimately investors selling what they can, not because what they want to. And that's where you could potentially get broader, I wouldn't necessarily, it's not going to be like a global financial crisis type situation, but a broader contagion event where you start seeing public credit and public markets start to go down as investors raise liquidity in an area where they can rather than necessarily want to.
Yeah, it's going to be fascinating to see. I just want to hear, are there areas that you would invest in as far as private credit buying, did the first sell off in the Blue Owl or some of the other companies?
Probably not. I mean, I prefer to stay on the sidelines for a moment in private credit. Again, particularly on the corporate side, you can easily make a case that, whether it's infrastructure or hard assets like degree of credit space as you do on the corporate side, but essentially the leverage loan aspect of private credit, right, where you have software companies that are the leverage across.
Well, there's a very low chance that price will drift above 68.52. There's a great chance that this is the closing range, 68.45 to 68.52. With that being said, I will not hold my trade into expiration. It's too close for comfort.
Your wedding begins here. You found your person. You'll find your perfect place. Welcome to Marin County. Love story meets its perfect setting. Extreme dramatic beneath ancient redwoods, on the front of the sea, or overlooking the sparkling San Francisco Bay. Whether you're planning a seasonal delivery or a grand affair, Marin offers the same endless spirit to make your wedding uniquely yours. Discover where forever begins at visitmarin.org and explore the wedding page for details.
Running a business teaches you one thing fast. Business losses are rarely loud. They're quiet. It's a missed call or a follow-up that like every business system is called, modern business phone system. With one shared number and every conversation in one place, nothing slips through the cracks. Get started free and get 20% off your first 6 months at grow.com/2minutes. That's grow.com/2minutes. Grow, better customer experiences, no more silent costs.
Even more. Commercial free. So you get more of today's country.
Hey, Green Goblin, you got a clock drinking. Water in the sink's overstaying its welcome. Didn't today's on top of yesterday's mistakes. You hope that he go away. Clogs don't just go away. I'm making them. I'm Green Goblin, the only clog dissolver you need. I'm bleach free, pipes, and eyewear. Guaranteed to be back. I never met a clog that's been no, Green Goblin, let the goblin. The jacket guarantee. One's finger, everyone's soft. Tell Alexa to play Jack FM on Tuesday. $17 the ounce. 1%. 5 without on below. headlocked in peace talks, and the U.S. blockade developed. New market shares down 0.5%. This after the Texas Attorney General said his office is investigating the presence of so-called forever chemicals.
Subject to intersection diversion back down again to the reversing move up jump that we actually saw on too.
After a we saw most people in the that's what the market is the S&P rallying after Trump's broken in oil and that.
I haven't closed it yet. Still, it has breached my short, but not my long. So holding, and will hold unless that happens. Don't want to get hit between the eyes today, so I would rather sell, take a small loss than to have that happen. That's awful when it lands right. That's even worse. When price closes between your short and long strike. I don't like that. I don't think it'll expand too far beyond where it's at right now. It's been getting rejected even at 68.50. RSI is pushing.
Trying to decipher what each side is saying and what to believe from what each side is saying, whether that matches. Well, at the same time, we're watching basically for any sort of kinetic action. Not that we're hoping for it, but with the threat of a U.S. blockade that was effect hours ago and is now also paired with the president's threat to indict any vessels of any country transting from Iranian ports.
Let's see what's happening on the 2 minute. Seeing already sell. I am on the 2 minute.
All that taking into account, we haven't seen any sort of action yet. The flashpoint and perhaps but at the same time, we're trying to decipher what to make of the president's remarks and where the diplomatic talks are going after the failure of Islamabad over the weekend. That you played just now, President Trump is referring to a call that has happened this morning. To my knowledge, we have not gotten any confirmation from the government whether that again, the question of who participated in the who direct talks in Pakistan. We don't know if those are the people that really kind of pulling the levers on what the region might act on in the end.
Well, Michelle, how call it status there in terms of who's actually participating in these conversations, and to your point, mixed messaging, whether these calls are actually taking place, whether the right people are involved in these conversations, and what that really means, because the question at the end of the day is, when does this conflict end? Presumably, it's pretty important who's in those meetings.
Yeah, well, Bailey, is a very fair question, and one that we have.
Okay, let's see if it holds.
From the Iranian side, particularly the Iranian Speaker of Parliament, as well as Foreign Minister of Getting involved, and obviously we on the U.S. side those direct talks. So at least there was some transparency even on these unprecedented
for many decades.
Let's see what this shapes up to be.
But now what we see is kind of sympathetic rhetoric that we've heard from both sides, really, U.S. and Iran, on where these talks are headed and what the disagreements are. There is a clear divergence of opinion and view on what broke down those talks over the weekend. We've heard it again today from President Trump that Iran's nuclear ambitions were the main reason that the talks broke down. On the Iranian side, it's negotiators, and of course, opinion on things like war reparations and actually ceasing the fighting and ceasing attacks on Iran were among other disagreements that have remained for some time. So we don't know where talks are going, and I think we're seeing the investors and others act on these kind of incremental developments, but not with the sort of confidence that action will follow in line with what they've said. To come down to one or two main points, is it about uranium? Is it about, I don't know, I kind of lost track of that's to the mission of what this war really is about. And so, what is it? Come down to one or two things? Well, I think in broad strokes, Carol, you can say it comes down to nuclear ambitions and control of the Strait of Hormuz, but there are many things that the two countries have openly disagreed on. The nuclear ambitions, it is not a forward on exactly how to play that, and of course, there's a long-term discussion.
Just waiting to see if we get a pullback.
Would have expected. Is there a time frame or a limit where the White House is going to have to consider potential weakness going into the midterm?
Yeah, this is.
Questions in, and I think a lot of the political actors within the administration are looking for the midterm deadline as a hard stop, but really would like things to resolve much sooner than that. Some of the leading American systems that we've seen, gas prices have risen, and the Iranians try to escalate that as well, warning that it would get much worse before the
Yeah, we closed that one out. That one's. Yeah, that one's a close. Yeah, we're not even messing around on that. Although, we'll probably, I don't know, get a pullback. Maybe, maybe not. But didn't want to take any chances on that one. Yeah, these late trade windows. 10:30 seems even too late to get a decent premium on the expiration trade. So it probably has to be even earlier than that, because in order to get a decent premium, it had to go again pretty tight. So the trade window for the expiration trade, um, this range right here started showing itself at at 10. So we got to this range right here at 10. So would have been better to be at like 68.60 ish. That's what Grace had recommended, and then the put down here. Uh, yeah, there was no action on that at all, not for 25% even. At least not right now. And I didn't want price to go to 68.60, although the pin zone is 68.45 to 68.52. That's where we're looking at the gamma pin. So it's outside of that range, which still kind of puts it in that range, right? Uh, Still haven't ruled out like distribution either. Because the VWAP's down here at 68.31. However, Grace is saying that the institution traders would want price to stay between 68.52 and 68.40. So we'll put that to the test. It's still not too late to do a gamma pin. Especially with price getting close to 68.60. Just taking a look at the structure to the left. Let's go daily. Oh boy, look at my lines. However, we just want to see how close. Oh, okay, we got little room to run. Oh, 6985. Although price should not go that high. I hate talking about shouldn'ts, but we are in a wild place. Uh,
Obviously, you're watching this. Earnings season, loan set. And what we were starting to think about, I think they think things move a little bit better now. People are close to GS is down about 2% now. The gold is
Yeah, really don't like when the play involves like going against the trend. Our our the thesis is sitting on the thesis is based on um, being at the top of the range and not catching it on the way up to the range, right? Here we go. This is a
Psychology trap traders at the bottom before the next thing.
okay. So here we go. We are in the final hour. So yeah, this was the definite play at the VWAP and riding it up. That was the play of the day.
Fourth quarter final A plus setups only. Smart money psychology trap traders at the bottom before the next engineered move.
familiar with the conversation and stuff to the this wasn't a complete failure. There was progress made. In fact, the vice president himself said the good news is they had a lot of substantive talk, and they did make some progress, but they weren't able to reach a final deal. Hours into the U.S. Navy's blockade of major ships that were out of the Strait of Hormuz, a pressure tactic on Iran. Governor Watson reports it's stopping a tracking simulation and kind of becoming a go-to for President Trump because it's a similar version to what we saw in the to pressure at the time. The Worldwide Catholic Church calling for a defund of terrible foreign policy.
On the papal plane to Africa before it had even landed, he told journalists that he, quote, has no fear of the Trump administration and will continue to speak out loudly for the message of the gospel.
The tax thing. This Wednesday, President Trump is touting tax rates in the domestic policy bill passed last year.
There was President Trump standing up for the Oval Office by the White House colonnade, including Texas South Baptist fast food and fast food named Sharon Simmons.
Let's see. I'm just taking a look to see where the 20 deltas are right now. Oh. 68, 65, giving up a 20 delta. On the call side, and on the put side, $68.45. That's right at our resistance level. I mean support level. I would opt the 65 over the 45.
Filthy begins there chanting. Russians go home. Mr. Orban's courting of Russian President Vladimir Putin. Orban defeated after 16 years to find strong support. Cabin crew after a similar stoppage and as the government decided to airports all of them say Thursday. Those departures on the magazine, global leaders stay ahead with insight on the people, companies, and trends shaping today's culture. Plus, global business, finance, and tech news as it happens. Bloomberg Business Daily, Carol Nasser, and Tim Senebeck, live on Bloomberg Radio, television,
All right, mental note for tomorrow on the expiration trade. Oh, the mental note is Delta 10 to 20. That's preferred. Aggressive is 21 to 25 delta. That's with strong control. There was no strong control today. It was all trend. Seeing the first sign of a reversal on that little push. Oops.
All right, so we're going to talk about the war, where we are. We're going to continue to get updates from the White House, check in on the trading day. We also have former senior advisor to President George W. Bush, Neil Jaffer, National Security Institute founder and executive director.
Again, we're oversold right now. So tomorrow's strategy. For the expiration trade, the minimum distance of 10 to 20 points. With a target of credit $1 to $2, with a minimum of 70 cents. Gotta tighten the strike too much to get paid, skip the trade.
Charlie Allen, alongside Carol Master, looking at market that is selling today, building on 2 weeks of gains. Joining us right now is Eric Weiner, who is Bloomberg News senior editor for the Equities Americas. Eric, my former boss as well. I might as well throw that in there. Thanks for joining us, Eric. So the S&P right now. What's a good boss? I would imagine you would be. Sorry, not to put you guys on the spot. But, we couldn't talk to you. It's confident.
we were at the end of February when the ankle attack happened. We're call it 2.5 weeks rebounding. Is that complacency or is that a market that is moving past a war that potentially could be over the year?
Well, it's a market that's hoping to pass a war that could be in the year, I would say. I don't think that you're seeing a lot of necessarily belief in the rally. You're seeing a rally. And we really had low volume for a while now. Today is no exception. The sentiment indicators aren't great, but you do have, this upward momentum, and the idea is pretty much that Trump wants out, and therefore the conflict, as such as it is, will end before long. And when that happens, we will get an updraft. It's interesting to see how the market moves much more on what Trump says than on what Iran says. But that's where we are. That is basically that they will outlast him, and he'll
Off earnings season that CEOs are actually saying we'll drive the market, or are we still going to live in an era where every two social posts we're seeing from the White House are reporting Air Force One and lose the market?
Yeah. Well, the outlooks are important, and but it's interesting. Like the commentary is like, this is awful, and the home prices come in and they're not great, and everybody's saying, well, this is war, and this is the economy that we're in, and yet nothing moves. And then Trump says, well, we're moving ahead, and everything looks good, and suddenly we're lifting off. So it's hard. I think that there's like a confluence of opinions that it's like you just get this enormous rush of people saying, here's how the war is hurting us, here's how the war is hurting us, here's how the war is hurting us. Maybe it overrides it, but there is so much hope that everything will change when we leave, and when it's over, that it really carries everything. And to that point, I mean, I was talking to you, last night, and I actually asked what will happen tomorrow when Trump comes out and says something that, this is at this point, it's like, everybody's walking away, it's work, whatever. And when Trump comes out tomorrow and says everything's, moving along, how will the market react? How will the market react?
We talk about this on the desk all the time. How much of this is algo trading versus people trading, especially when I look at the various functions and one 20% below your average volume trade.
That will, what appears to be going on, normally I would say if the algos are not moving us, because we tend to bring in big volume, but it sounds to us as if retail is kind of sitting this out. And that's what, like, when you're dealing with the algos and you're dealing with bots, things can get irrational. But I'm looking on the board and I'm seeing, oil down, 10-year below 4.3, heading towards down below 4.3, below 20. So something is fundamentally going on within the market.
I don't know. Yeah? What? What do you think that is, ultimately? Have you decided that it's going back to a president who wants this war to end?
That's really it, and that the setup, if you listen to what Lori Tomasino was saying on the part, it's actually early in the Trump, but just now on that clip, the setup is for the market to go up. You could flat for 9 months, so the idea that the market would go up from here is not abnormal. X global crisis. The assumption that there will be no global crisis is what's kind of weird. The assumption that you can have oil, like as Kelly pointed out earlier, that oil below 100, but usually when oil's above 95, we're kind of freaking out. So that like we're just sort of accepting this as oh, this is a great sign, shows you how far we've come. But it also shows you kind of the challenges that are ahead of us, regardless of what happens. There's this hope that like, okay, the moment that happens, the moment we pull out, that the world comes
Please remain popular over Thomas Henderson, investor, head of multi-asset macro investing. And you just really stressed, right, that we're going to see inflation. We're going to be dealing with inflation after this war, no matter what, whether it's into the system or just oil, you know, got that higher pricing from where it was ahead of the war, right? So that is something that continues also to weigh on this environment, meaning no Fed rate cuts, folks, and you think that would even be a bad idea, and that would ultimately lead to lower growth in these states.
There may be rate hikes coming if inflation is set. Look, you have oil, like right now I'm looking at it at 97, or heading toward 98. That's inflationary. You know, you're talking about supply chains being cut off. You're talking about, you know, luxury goods makers that are, you know, having trouble selling to their clients, getting enough stuff out there. None of that's fundamentally really good. And that's where, like, when this is all done, that's when suddenly the CEOs say, hey, we're not going to rebound in a quarter, it becomes an issue. But right now, there's just this hope that, you know, everything's going to get great when it all ends, and Trump wants to end it. So every time he says something, you know.
I think that you go back to where we were. I don't know. That's my feels like it's a good thing. Eric Weiner, always the best. Bloomberg News editor at News America. So when we come back to the White House in D.C., we'll perhaps the latest.
You never want to miss a Bloomberg Business Week story? How much do you subscribe every day? You want to watch deep reporting and analysis on reporters around the world, including unlimited access to Business Week. Check out our offers right now on Bloomberg.com/subscribe now. Inviting you to join us for Bloomberg.
Yeah, here's the deal. Most of the liquidity is at 68.50. So this is about where price is going to stay, is in this range right here, with the liquidity being at 68.50.
All of your favorite music, news, sports, and more, all in one place. Hear all of the audio
Reliable water doesn't happen by accident. It depends on the best infrastructure of water treatment facilities, reservoirs, and most importantly, a highly dedicated team. Your local water providers are made up of a diverse group of people with a wide variety of backgrounds and training who all share a common goal: ensuring high-quality water is available when you need it. Learn more at
Let's see, we're at, wow, okay, price is pushing 68.61. 68.60.
Move to Oklahoma. Found something funny? Send it instantly. TikTok makes sharing with friends effortless.
68.75 could be a target, but I mean at 12.23. The reason I say 68.75 could be a target is the open interest at that level is 4,000. So I'm seeing probably the most amount of contracts of the day is 68.75. Anything past that is like an overstretch. 6875, and then on the downside, there's 6850. So that's why we stick to 25% on any given day, because the market can turn within 25%.
now up 131, up by about 0.3%. Nasdaq up 194 for Nasdaq, now up 0.9%. The VIX just above 19 right now with the 10-year 4.29%, the 2-year 3.78%.
RSI is like 75. So that's a pretty strong push.
Over a year, a large company landscape now up 5.6%, up by 4.2%, higher up by under 1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pelletin. That is the Bloomberg Business Flash.
All right, Charlie, thank you so much. Tell them also with Kelly Litchfield here on Bloomberg Business Week. Kelly, we're live on video. You're on YouTube and Bloomberg Originals. We're going to go to wrap up the trade on head over to TV color shortly. We do know, I'm looking at among the most great stories, and the President Trump saying Iran reached out to his administration.
Yeah, so not only is the 25% exits crucial, but we also have to give respect to the price levels and the support levels and the resistance levels. So when we position ourselves, should always choose a position behind the support and resistance, and even give that room. So once it's claimed, we can exit the trade with minimal damage. So what am I saying about strike position? Well, I'm saying that when we identify the resistance levels, for example, the next, I'll give you an example. Hold on just a moment. Yeah, that's how we'll wrap today up, is with a little review of positioning. So what do we have here? Well, I'm saying that I've identified 68.75 as a resistance level. So if the resistance level is 6875, let's mark that off. So if the resistance level is 6875, and let's put it here. So if our resistance level is 6875, then what we want to do is, let's say we have a call. Let's say we did an iron condor and we have a call credit spread up here. So we would place our call credit spread above 6875, being that that's a resistance level. So it would go above 6875 on the call credit spread side. And if price gets here and continues towards our call credit spread position, then we can exit. We have to exit if it is coming towards us like that. Um, so price has gone way past. So not a gamma pin day at all. It did show us gamma pin behavior, but it's not acting like a gamma pin. Not even a retracement. Oh my goodness, really? Well, there was a slight retracement right here, and it just bounced. So let's see what this one does. Let's go 2 minute. Wow.
Question around why. I'm just interested in what your perception is on why we're seeing conflict continue to play out and why the White House is deploying naval ships to blockade the blockade.
Just see if it gets to 6875. It's always a target.
What are you looking for over the next few days? Just,
here in New York, we're market watchers and we live headline by headline, but at least it seems if you track U.S. equities, look at the price of oil. Monday and Tuesday are at least a little bit more optimistic before we shift towards maybe pessimism going into the weekend.
I think it's in everyone's interest to come back to the table and start talking. And I think that's probably what, despite all the bluster, all the social media trolling, all the comments about it, that is what both sides do, I think, the wrong one to do. The humiliated the talks over the weekend, because it's working too hard doing some sort of diplomacy thing, but I come back to the table because, us, the U.S. and the Israelis going around the same things are very in no one's interest.
If you think about any Nobel Peace Prize, do you think that's part of? I just wonder. I know you laugh, but
Well, I don't know how you get the Nobel Peace Prize by threatening to end their civilization. I think a little off. Justin Trudeau, as you know, extremely irritated with the Pope.
yeah.
And he did say also today that they might, the administration might stop by Cuba when they're done with Iran. So he really seems to be focused on almost the opposite. It almost seems to be, and I don't want to get inside Congress, I don't know what's going on in there, but it does seem like he wants his legacy to be foreign policy focused. He just seems to not be interested in domestic policy whatsoever. He's supposed to be driving Republicans on the whole crazy, but they seem to be letting it go.
Well, and I guess when it comes to the Peace Prize, you are so right. I mean, some of the conversations we've had with folks on the basis of do we actually get to a better way forward in terms of our relationship with Iran or Iran with the rest of the world, like in food and everything, and I don't know. It seems like it's impossible.
Yeah, it does. I mean, I think at this point there would be a miracle if we normalize relations with Iran right now. We've been in a state of Cold War with them for 47 years, and so has Egypt. And at this point, I don't know how, even if the war ends and gas prices go down and ships are flowing through the Strait of Hormuz back and forth as a mixture, then I still don't know, because he didn't achieve regime change, really. Remember, he said to achieve regime change, but the son of the last Ayatollah, who's only the second Ayatollah, in the entire existence of the Islamic Republic, is now in charge, and he just failed to win it in the U.S. States. So does that sound like the, I don't think
Democratic Congressman Cuomo, reports
former staffer of Chris Swalwell avoided her flight with other women, accused him of sexual misconduct, including sending them nude photos.
Thank you. President Iran peace talks.
A senior Fox County government official has confirmed to CBS News that intense efforts are underway to resolve by the target the U.S. to involve Iran back to the negotiating table.
Of Leo's last violation of international law by neo-colonial world powers during the North Korea, and hours after President Trump's criticism emerged as an outspoken critic of the war with Iran.
The true struggle for liberation will be definitely won only when peace in our heart has finally been achieved.
I'm Jennifer Piper. The music you love is all right here on TuneIn, bringing you good vibes and the hottest hits. Are you ready to amp things up even more? Just upgrade to TuneIn Radio for all of our exclusive music channels, completely commercial-free. So you get more of today's hits. More country roads. And everything else. Hear it all here, commercial-free on TuneIn.
The Jack FM guarantee. At least one speaker in every bunch of socks. Tell Alexa to play Jack FM on TuneIn. That's why today's Jiro is just here to make your journey just a bit better. This classic feel-good country songs to bring summer vibes all year long.
Yeah, top of the range does not get it done on the expiration trade. That's especially on a trend day would have been better. It's always better to do the VWAP. At least you know you're going the with the market, and you're going with smart money with VWAP confirmation determining the bias. So that's the bread and butter, and didn't do that today. Today was more anticipation of the top of the range and timing it to go down, but there was no down today, so that is not a great illustration of the box. That's actually one of the pitfalls of the box, right? When you have a trend day and it's bullish and it hits the top of the box, like your call credit spread it just doesn't have a chance. So VWAP confirmation, once it's solid confirmed, there was really no messing around at the VWAP. It went up 25% right there up. We'll call that a retest, huh? And then 5-minute candle right there, and then up, a little sideways and up. Yeah, and then it really didn't retest the VWAP till much later. That's 25% all day right here. And then again, VWAP reclaimed, 5-minute candle above, another 5-minute candle confirming, and then it just rode up from there. That's a very nice move. 16 to, and we'll do the body of the candle. That was a 30% move right there. I did catch a 40% move though on the call credit spread back. There was that the top of the range at that point. 50. Here it was, and then it broke down there, and then it broke up. So this was call credit spread territory right here. Boom, 40% to right there, and then it broke back up. But I mean, put credit spread was the play of the day. Let's see, we got about 15 minutes. I am curious to see if there is any distribution going to happen today at all. That's what my final play was based on. Well, I exited it because I was threatened.
On Bloomberg Radio.
minutes ago doing our paper trade on this new master on the information Tim. Today we've got really we have a positive session and keep reminding us not a lot of volume. Investors they're buying in this market overwhelmingly.
They're buying this market. We're getting closer to where we were before the initial strikes on Iran. So we are on pace to close at the highest level since March 4th. So again, not quite where we were, but climbing that wall of worry again, going into a critical earnings season. So maybe we will break higher.
I'm just going to say it's a weird day. We did keep monitoring and talking to our folks at the White House, and it does sound like there's a fragile ceasefire, although it doesn't always sound so friendly. We're now got a U.S. blockade on the Strait of Hormuz, so there's still a lot of questions about kind of where we are and where we go from here. Curious to see what Matt Weston has to say. He's Miramar Capital, co-founder. They've got about $550 million announced investment. Illinois. Matt, good to have you here on Bloomberg Business Week Daily. How are you?
I'm doing well, thank you. Appreciate coming back.
Well, it's good to have you back. How are you thinking about this market environment, and how has it changed as a result of the war?
Well, I think if you look at it, we're about 4% off the S&P high and the NASDAQ high. So it's been a roller coaster. Everybody expected the worst to happen when you have oil going through like around 110, 120, war breakout, and now that you have the Straits of Hormuz is now being boycotted, everybody thinks it's great. Every word the president says, the market makes a move, right? And it seems to want to discount any potential negativity towards the positive uptrend. So to me, this market is basically discounting nothing negative and is extremely optimistic. And we think you have to be very cautious here because one piece of negative news, one attack that goes awry, the Middle East can go up in a heartbeat. And I don't think people are giving it proper credit because it can change in hours.
Well, Max, you make an interesting point in how quickly it can change. I remember talking to folks at the end of February saying, hey, is Iran remotely priced in? Resoundingly no. If I told you then, though, that WTI crude right now would be at $98 a barrel, we'd be talking the potential for Fed interest rate hikes. What would you expect the S&P to look like? Because I can't imagine it would be 0.5% lower.
Well, I think that's the key. I think Fed rate hikes. If you start really anticipating Fed rate hikes, I would expect this market to come down. And I'm surprised, but the market right now is saying we do not expect the Fed to raise interest rates, and we think any effect in oil is temporary in nature. Therefore, you do have a tick up, but everybody's discounting that this will be rectified in a short period of time. And I think that's why the market's not discounting risk properly. If you take this, what's happening in Iran out for a moment, you have inflation, which is high. You have a Fed uncertainty that's going on right now. We're not really sure when the new Fed chairman is going to come in and how quickly he can cut interest rates, if he can cut it all. We think he will, but it'll be towards the end of the third, beginning of the fourth. But right now, the market's saying we don't really see a big slowdown in the economy. We don't see problems with interest rates, and we think this is all temporary. So when you're only trading 4% off the high, it's hard to say that the market's pricing in any real risk here.
All right, so concerns about inflation, uncertainty with the Fed, slowdown in the economy, earnings. I mean, these are things, from my understanding, that you're watching. So you're all in cash, right?
No, actually, but we're dividend growth investors, so we had more conservative equities in nature, but we also within the portfolio have a hedge built in because we do have a large exposure to energy stocks. So we look at it that way, and then we have new technology. So when we look at our portfolio, we tend to run a portfolio with a much lower beta than the market. So we're not as concerned with daily fluctuation, but we're concerned. We're concerned that the runaway concentration in the market, in the indexes, for example, that's where you get bigger whipsaws. But with the individual stocks, we feel we're well diversified, but we do own energy, we own defense stocks, in addition to technology. But we recognize that you could get a sell-off of 5 to 7% in this market like tomorrow. I mean, just imagine if we wake up tonight and something goes wrong in the Middle East. I've been there. I just got back. So, I mean, it happens daily.
Well, tell us about your experience being in the Middle East. Where were you, and what were you seeing and hearing?
Sure. Well, I spent a lot of time going back and forth to Israel, so I stayed an extra week, so I was there for a month with my wife. And you don't know what you don't know. And the reality is
things change so quickly. You keep thinking of it, what we can predict this. We can't predict what Iran's going to do. And I'll mention, I don't think you can predict what the president's going to do. So when you see that and you see oil production's declining, you see interest rates going up a little bit, but you also see the consumer in the United States is being affected by these prices. When I got back after 6 weeks, I couldn't believe how affected these prices were, and that affects consumer spending. And I think people are underestimating how volatile foreign politics are. And I think they're going to look up to that. We saw it for a little bit, but we believe it's going to be resolved quickly. And it takes two. And I'm not seeing.
Okay, so here we are with the sweep at 68.75. I think we'll get a wick up there.
And I didn't know from like 3 hours before I was on a flight. Just because we kept playing the airport. So I just think people need to calm down with the optimism and give things time to just develop.
Well, Max, you make an interesting point to pull back some of the optimism. One of the things that I feel like has been top of mind is the ultimate knock-on.
And so that's what I was saying about the BWIC is if, or just an iron condor at this point, the strike would be above the 68.75, and if this gets claimed, this resistance level gets claimed, then it would be time to bail out of the trade. However, that would have been a good earlier play. However, right now, with this late in the game, a tight put credit spread would have been the play, but again, you would have to get so tight to where you wouldn't have much safety. And let's see what price does now that it's reached the target.
Where does the Fed come out? I'll say we got settling down. Yeah. So he's clear of everything. Right. So that's an uncertainty. We don't know how long this inflation is going to be sticky because we don't know the ingredients but how long it's going to remain at this level. So I'm not negative on the market. I'm negative on the optimism that you see right now. Thank you so much. In 1926, the students finally echoed across the University of Arizona. Curiosity, excellence, and determination. You transformed Bear Down into a legacy. And you know what? You're just getting started. At the University of Arizona. I'm Lee. A new button, which, by the way, switched to Gusto for payroll.
Yeah, so ideal position is 10 to 20 points beyond the resistance level. So that would have been 68.85 to 68.95. And we would be looking at how deep price goes 5 minutes left. That's a hell of a move, right? From a trend day, for a trend day, like to the end. Wow. Yeah, so I know the best trades take place from about, and we'll say 6:45 to 10:30, like exiting, managing at by 10:30. Um, a hold a close trade, that's a tricky one. Like holding to expiration. No, no, no. Not today. Unless the wings were super wide. Could have did a B wick with wow, 6,900. We are almost at 6,900. That's like an all-time high. That is so bizarre, considering we're at war. But that just goes to show you the market just doesn't care.
Spiking last week, it's up almost 1%. I don't know if it's because Senator Majority Leader is saying that we need to plan a line down to the war, which I would say is consensus. But nonetheless, we are seeing a pretty sharp move into the close right now in the S&P 500.
Well, this gets to some of the conversations we've had with our folks in our Washington, D.C. bureau about the members and members of Congress, Republican members have to be thinking, especially if they're up for re-election, thinking about what happens in November to their positions.
Well, I mean, my conversations that I've had with investors over the last month and a half since the conflict began was if Trump ran on a platform that was lowering interest rates to make housing more affordable and making living more affordable, with gas prices going up and the cost to refinance homes essentially where it was before, you're not really meeting the objective. So at some point, the Trump clip, whatever you want to call it, has to get.
Yeah, right. And we've seen that happen before. Hey, one thing I know that's definitely on our radar as we count down to the close, just got a few minutes left in the trading session. This has to do with Lululemon, which has come under some pressure today. It was down.
Yeah, we got 2 minutes to go. No distribution at all today. And we are almost at an all-time high. Wow.
Something that Bloomberg has reported a lot on, and we've definitely talked a lot about it.
Yeah, and according to the Office of the Texas League,
let me see.
Questions about the potential presence of certain synthetic materials and chemical compounds in their apparel. Again, talking about Lululemon, and this is a kind of another negative headline for a company that has really been struggling from selling products and some good images and competition. Right now, trades for $162. Not $200.
Yeah. Today was definitely a run for it kind of day. The highest resistance level I had was 68.72, and 68, that's right, 68.72 highest resistance level. We have breached that, and we are at 685, and we are, and I looked at bar chart for the 68.72, but I also squeezed in real tight and just started looking at, did I go daily? No, I was on 5 minute. I did a 5-minute squeeze in. I brought the screen in real tight. I looked over here to see what that high was.
Lululemon, which has bumped in the stock.
And that one's not even as high. So let's go. What would we have had to do? One day. Look at us. See, we're back in 2019 back there. So we're definitely here.
Going into the close, erasing all of the losses that we since the initial on back at the start after February.
Yeah. Pretty interesting day. But like I'm saying, it's got to play at 25%. Got to have those non-emotional stop losses in there. Just got to cut those losers quick. So pretty much that's it. It's 1 o'clock, and let's take one more look at this chart if I can get it to respond. Yeah, that's what we look like today.
Right now, up about 1%.